What if I told you OpenAI just figured out how to buy hundreds of billions worth of computers without actually spending any money? Sounds impossible, right? Here's the thing. While everyone's busy asking ChatGPT to write their emails, OpenAI just pulled off the most brilliant financial trick in tech history. We're talking about $1 trillion deal that's so clever, it might actually be too clever. And the scary part? The entire AI revolution could be built on what some investors are calling the biggest bubble since 2008. Let me break down exactly what's happening, because this is wild. So OpenAI needs computers, but not just any computers. They need massive server farms filled with the most expensive AI chips on the planet. We're talking about spending hundreds of billions of dollars. There's just one problem. OpenAI doesn't have hundreds of billions lying around. But Sam Altman and his team did something nobody saw coming. They created two separate deals, one with AMD and one with NVIDIA, that completely changed how tech companies buy equipment. And when I say changed, I mean they basically invented a whole new way to print money. Let's start with the AMD deal, because this one is absolutely nuts. On paper, OpenAI agreed to buy $90 billion worth of AMD's AI chips over several years. That's already a massive order. But here's where it gets interesting. AMD didn't just say, okay, cool, pay us $90 billion. Instead, they gave OpenAI something called warrants. Think of warrants like coupons that let you buy stock for almost nothing. AMD gave OpenAI the right to buy 160 million AMD shares for just 1 penny each, 1 cent per share. Now here's why this is genius. If AMD's stock price goes up to $600 because everyone's buying their chips for AI, OpenAI can use those warrants to buy all those shares for basically nothing, then immediately sell them for the full price. That's about $96 billion in profit, which is almost exactly the same amount as the chip order. You see what just happened? OpenAI essentially gets the chips for free if everything goes well. They're using AMD's own stock price increase to pay for AMD's chips. It's like if you bought a car, but the car dealer also gave you lottery tickets, and if those lottery tickets win, they cover the cost of the car. The whole thing creates this perfect loop. AMD's stock goes up because OpenAI is buying tons of chips. OpenAI makes money from AMD's stock going up. OpenAI uses that money to buy more chips. Repeat. If the AMD deal sounded crazy, wait until you hear the NVIDIA one. NVIDIA is planning to invest $100 billion in OpenAI over the next 10 years. That's already one of the biggest investments in tech history. But here's the catch that Wall Street analysts at Goldman Sachs figured out. OpenAI is going to use that $100 billion to buy NVIDIA's own chips. Let me say that again. NVIDIA gives OpenAI money. OpenAI gives that money back to NVIDIA to buy their products. Goldman Sachs has a name for this. They call it circular revenue. The money goes in a circle. NVIDIA's investment becomes NVIDIA's revenue. On their financial reports, it looks like explosive growth, but in reality, they're basically paying themselves. Imagine if you started a lemonade stand and your dad gave you $100 to invest in the business, but then you immediately use that $100 to buy lemons from your dad's lemon farm. Your dad's lemon business shows $100 in sales, but the money never actually left the family. That's what's happening here, except with billions of dollars and AI chips instead of lemons. Now here's where things get really interesting, and by interesting, I mean potentially scary. Goldman Sachs did a deep dive into OpenAI's actual cash flow, and the numbers tell a very different story than all the hype. Looking at just regular operating costs, OpenAI needs about $35 billion per year by 2026 just to keep the lights on. That's not buying new equipment, that's just running what they already have. Where's that money coming from? About 48% comes from their actual revenue, like people paying for ChatGPT subscriptions. 27% comes from vendor financing, which is fancy talk for chip companies giving them payment plans. And 25% comes from outside investors. So far, that almost adds up. Almost sustainable. But then you add in the big construction projects. OpenAI is building massive data centers with NVIDIA that cost about $60 billion. They've got this project called Stargate, that's another $19 billion. Suddenly we're talking about needing $114 billion total. And here's the scary part. When you include all of that, OpenAI's own revenue only covers 17% of what they need. 17%. The rest is all external money. 3/4 of their entire operation depends on investors and partners continuously pouring money in. OpenAI isn't running on its own success. It's running on the promise of future success, funded by other people's money. This structure created some absolutely insane market reactions. After OpenAI announced these deals, Oracle's market value jumped by $244 billion. AMD's value went up $63 billion. Everyone's making money, everyone's excited, the AI train is leaving the station. But some people are starting to ask uncomfortable questions. Moody's, the company that rates credit risk, put out a warning about Oracle. They said Oracle is now way too dependent on one customer, OpenAI. If OpenAI stumbles, Oracle stumbles. And here's the thing about OpenAI. Sam Altman, their CEO, literally said that profitability isn't even in his top 10 priorities. Read that again. The guy running a company that needs over $100 billion in external funding says making money isn't a priority. That's fine when investors are throwing cash at anything with AI in the name. But what happens when they're not? One Silicon Valley investor called OpenAI, a company born without cost discipline. They've never had to worry about running out of money because the money just keeps flowing in. But that creates a dangerous culture. When you've never had to count dollars, you don't build the systems to survive when dollars get tight. Goldman Sachs noticed something else troubling. NVIDIA's customer base is changing. It used to be mostly big, stable companies like Microsoft and Google buying chips, companies with real revenue and real profits. But now, by 2027, Goldman estimates that $66 billion of NVIDIA's revenue will come from AI startups like OpenAI. Another $46 billion will come from sovereign AI funds, which are basically government projects that also depend on continuous political support and funding. These aren't stable customers with steady income. These are customers who themselves need constant outside funding. It's like a pyramid where everyone's success depends on the next person's success, and eventually someone at the bottom has to actually make real money for the whole thing to work. If user growth slows down, if AI doesn't monetize as fast as everyone hopes, if investors get nervous and stop funding these startups, the entire structure could crack. And when it cracks, it won't crack slowly. These circular financing deals mean everyone's connected. One company's problem becomes everyone's problem. Look, I'm not saying AI isn't real or isn't important. It obviously is. ChatGPT is incredible. AI is changing everything. But what OpenAI is doing here isn't just building technology. They're running the biggest financial experiment in modern history. They've created a system where money flows in circles, where chip companies invest in their own customers, where stock prices fund chip purchases, where revenue and investment blur together. It's brilliant, it's innovative, and it might be completely unsustainable. The trillion-dollar question is whether OpenAI and AI in general will generate enough real value, real revenue, and real profits fast enough to justify all of this. Can they turn this circular financing into actual self-sustaining business before the music stops? Because right now we're watching the biggest bet in human financial history play out in real time. Every major tech company, every chip maker, and billions of investment dollars are all in on this bet. They're betting that I will change the world fast enough and make enough money to justify these mind-blowing valuations and financial structures. They might be right. This could be the foundation of the next industrial revolution, or this could be the most expensive lesson in financial engineering ever taught. We're going to find out which one pretty soon. Subscribe for more such videos and click on bell icon to get updated.